my channel. So I want to show you one of these trades that we took some few days ago. I think 1 or 2 days ago we took this trade here, and that was around 4.5. It was around 4.5 pips stop loss, and then the target was, at least I like to target 1 to 6, but in this case I targeted more than 1 to more than it was more than 1 to 7. I'll explain why. Because the market was very much moving, so I targeted more than 1 to 7, and this is how the trade went to be. So it was a very straightforward trade, very textbook. This is the checklist that we use. This is the slightly updated checklist based on the group's request, because I have a free trading group that I talk to every day, so they help me refine this checklist every day. Whenever somebody asks a question and the question seems to make sense, I'll come and refine the trade for the checklist for more clarity. So this is an updated, slightly updated for the entry purposes. I've updated it for clarity purposes, so we don't mark so many things because the checklist is the one that has already been marked. So why should we be marking so many things? We just know that we need to enter from here. So this is a trade here, you can see it. This is the trade. I took it from this place. Check on the description section, there is a link to join. This is a free group. If you come here, you will always be able to talk to me directly, and then we will respond to your question. It's free, we are not charging anything at the moment. So that day I took this trade. It was it was more than 1 to 4R. Then I also took NZD trade thereabout. I'll shoot that video after this video, so make sure you check it out so that you grasp it. And then there was this also that was there, but this one we didn't take it. I didn't take it personally because I wanted it to tap the supply, but it didn't. So eventually, then there was this gold trade. I will shoot also this gold trade because it is a good learning point. It was more than, actually this one went for more than 1 to 20 risk to reward. So join the group, it's free. And then, like for today, we were looking for just sells. This is one of us here, gave predictions, and most of these worked. Like these major pairs, all these ones here, these ones, actually this up to this point, all of them worked. These ones are not checked. Here we choose which one you prefer. And then also gold currently. So join the group, it's free while it still lasts. So this is the trade. So let me break it down for you for clarity purposes from the top, and how we came about this trade. Now we make it very simple. The checklist is very simple. Now what does the checklist say? Previous day close in your direction. So let me just copy this checklist, and then I'll clear everything. Let me clear everything, and then we can start afresh. So I've already cleared everything, so let me just clear everything, I think up to that point. So let's start with the daily time frame. I don't mark so many things because we are avoiding distractions. So why were we selling? This is the daily time frame. So this is the checklist. What does the checklist say? Previous day close in relation to the overall market trend, which is a trend starts when you see two candles close in one direction. Now if you check this market, we've been having, this was a bullish trend. It showed a bullish trend here, then it shifted back here. You see these ones, and then again it shows us some signs of bullishness, and then it shifted again to bearish. So we were bearish up to this particular point. So we were just, our responsibility here, we looked for sales this day. It didn't work. There was no entry. Actually the entry came the following day. So that day we couldn't sell because the previous day closed opposite in the direction which should be sells. So we waited for the sales to close. So this day closed on bearish, so that means that this day was supposed to be selling day. Actually the selling day is supposed to take this, just a minute, the goal was to take this low here. That is the overall goal. So let me go back. go back a little bit. So there we go. Then after that, so it means that we are back to, we are selling. So this day we are supposed to be selling. Let me just reduce that one. So we are supposed to be selling on this was on Friday, so on Monday we are just supposed to be early looking for sales, because the previous day, which was Friday, that the market was opened, we were supposed to be it closed on sales. Now after we shift to 1 to 4 hours, we shift to 4 hours, and then we wait for the first 4 hours to align. And then you can also, like I said here, we need to also apply discretion, and as you can see, the market is appearing to be bullish. And then so definitely some people are expecting to buy here, but that is not our problem, because we know that the market is bearish, so we are all interested in this bearish leg here. So that is why we don't mark all this. You know that the market is selling. As you can see, this is a momentum that sold. So basically there is an imbalance here, so it would be nice if we see it pull back here and then we drop. So let's see. So the day starts, there is no alignment. There is no alignment in 4 hours yet. There is no alignment in 4 hours. And then we see there is still no alignment, and then you can see there is an alignment. An alignment means that it takes, the 4 hours takes the low or the high in relation to your direction. We are selling, so we need to see 4 hours starting to take the lows of the previous candle. So when we see this, we automatically rush to 1 hour to continue this marking. It is that simple, guys. You don't need to complicate so many things. Just follow the checklist and it is going to be very simple for you. So I know some people are expecting that the market to pull up to this particular point, but that is not our problem. If it wants to pull, it will pull back. If it doesn't want, then we just proceed with the checklist, because nobody said that the market must always pull back to where you want it to pull back to. Just go with what the 4 hours and 1 hour is telling you. If it wants to pull back, it won't give us entry. It will be pushing here, so the entries will be very sloping. Now let's proceed. As you can see already, if you shift to 4 hours, already you can see that the market is already leaving, is already given us very important thing. The market has already, it has aligned, and at the same time you can see that we will have to wait for 1 hour, for 2 1 hour candles to close in your desired direction. The two must leave fair value gaps in 15 minutes. So definitely this thing is happening past London, which means that the momentum is already in. If it happened below London, we would have slightly waited for London to open, and then if London opens, then we get a sell like this, so we will just be selling next at the same time. So in this case, it has opened and left a very big fair value gap. If you check in 15 minutes, that is what I recommend. If you check in 15 minutes, you should be able to find a fair value gap. As you can see, this was a very good fair value gap in 15 minutes. Now there are people who are complaining that they didn't understand this thing. I honestly don't expect you to be so much of a newbie to understand this concept well, because it's an SMC that is extremely advanced, but summarized a little bit. I can explain all these concepts in terms of SMC and why we are having those summaries. So you cannot watch this video once and expect to get it. Maybe you will get it, maybe not. If you don't get it, the Telegram group is for free. You ask me questions there and I'll respond. If you're that serious, I'll book a session with you, because I'm looking for a team of 5 that we can, about 5 that we can have a circle, and people will be sharing like this. I want people who are able to see the market and share like this, and the market works. So if you join there and you're serious, already have friends from Nigeria, from South Africa. So if the team gets big, we will migrate to a more private group. So ask questions in the group, join, it's free. So at this particular point, the game is to just wait, because already we've seen everything. We've seen 2 candles close in our direction, one, so it means that everything is now bearish. So whatever we are waiting for is the market to pull back here, and then we get the entry. So as you can see, the market has already pulled back. If you don't see this fair value gap in 15 minutes, go to 5 minutes and you may see it. So immediately, how do we enter? When the market pulls back to the left 15 minutes or 5 minutes fair value gap, preferably within 1 or 3 hours. It should be within 1 or 3 hours. That is my preferred time. If it taps here and it is past that, try and wait for again 1 hour to shift bearish, and then you enter, you slow with it. Then market, then take trade, then take trades when 15 minutes candle goes in your direction. If you like, you can still refine to 15 minutes for even more entry, for even precision. Like at this particular point, if the market leaves an imbalance here, then you can still look for entry when it pulls back. So at this particular point, I don't like refining so much, because I could still take entries directly from this particular point. But this is now called high risk entry, and it's just being ridiculous, because the market can just pass and go through it and liquidate everything. So that is why you need some small reaction and then immediately execute a market entry. If you are liquidated here, you can still enter again, but in most occasions, if your direction is right, you won't be liquidated, and if you're liquidated, it will straight away go to stop loss, and the whole trade idea will be invalidated. There is no perfect trading style, and so this one. This is just an advanced SMC that has been summarized for everyone to at least find fit in SMC, because I was an SMC trader. At the same time, I know much about ICT trading, and that is why I was able to. Now at this particular point, I said if you see an imbalance left here, it means that the market is going to come there, and if it comes there, then you can still shift to 5 minutes here and look for entry. That is the meaning of that. The reason why I'm showing this 5 minutes entry is because some of our members requested it. And whatever they request is whatever I give them, because I can refine this thing to 1 minute if you like, but I just prefer to leave it at that particular point for the sake of trading prop firm, because that is what we are measuring on. We don't even have larger capitals to trade personally, so we are measuring on prop firms, and prop firms will give us very weird spread. So as you can see, when the market taps onto this particular zone, this imbalance here and here, so it gave you what? It gave you a reaction downward. So within this reaction is what now you can take again when you see another close in a direction. This one, the first one, this one was lacking momentum, so maybe you would have waited for another one with the same momentum, but take trade almost nearly at the same place, or when it pulls back somewhere there. So if this was the refinement, you still would have taken entry at that particular point, stop loss just above here, or you can still have it as stop loss somewhere here, but this now would be unnecessary because this is now bigger than the other one. So this should be the refinement, maybe 3 pips stop loss. I don't recommend this unless you are using a very good broker, because of tight spreads that you will need there. And as you can see, this one equally worked, but in most occasions you will be you might easily be when market pulls back, will subject you to unnecessary break even. So that is why I recommend to take it as soon as the market taps there. You should be able to take as soon as the market taps there, you should be able to take your trade. Or if you don't get trade, just wait for 1 hour to shift again to your direction, because this is a momentum that was coming here. So wait for it, and then wait for the market to shift bearish, and then you can again take your entries using the same principle. Nothing changes. So like you can see on this one already, it is at this particular point, and you've already clicked a 1 to 6. So if you are on this trade, you would have left at this particular point, or if you still wanted to hold, how much did we give? 1 to 7 already. If you want to hold up to this particular point, the only risk is you risk being stopped out, because this is where the big move started. It means the banks may come there to still try and remove the orders that are on drawdown, and therefore you may end up getting stopped out. So this now you can see, okay, this one now went without you getting stopped out, but in most occasions it will come to this particular zone for further testing. But as you can see, this one gave more than 10. This one is still also a very good profit. I just prefer 1 to 6 maximum. Sometimes I go overboard, obviously, but that is the trade. So see you in the next one. Subscribe.